You guys are the hardcore group here,
That's right.
right?
We should be
Ride or
one.
die. Who cares what's happening on elsewhere in the world? We are going to, and you online too. Thank you for showing up. We're going to do this. So for those of you who are in person, the odds are pretty good. One of our speakers kindly brought some raffle
Wine and Starbucks. Yeah. Trifecta.
The odds are pretty good. Sorry, online that you're not able to make it. Let's run through the typical process that we do. With the starting off with tell me something good. So what good happened in your guys' business last week? Pretty girl.
This is the craziest story ever. So we got a call from one of our listings, had the appraisal done, and the appraisal came back with it was 20,000 low. And so the buyer's agent calls me and she's like, "I'm so sorry. Here's a copy of the report." So I call my sellers and I tell them this whole.
How much of a credit were they asking for already?
Yeah, they had already agreed to a $37,000 credit for these folks. And so my clients were like, "No." So anyways, then she calls me back the next morning, the buyer's agent. She was like, "Well, there was a clerical error and turns out it did appraise at the price that we needed it to at 620. And so here's the new appraisal report." And I was like, "What? You've got to be kidding me." After all that happened. Yeah. So I called the sellers back the next day and I was like, "Well, good news." This is crazy. I've never had this happen before, but they made a mistake and you get to keep the 20,000. So they were very happy.
And we get to march
Yeah.
towards the closing table.
Yes, exactly.
All right. Good job, Sugar. That's a win.
That is nice.
And I think Haley has some new escrows in the last week. She's getting creative with her financing.
Yes.
Subject to
Lease options. So yeah.
nice. Yeah, lease options. Adrian has a closing, I think, happening tomorrow. Adrian has a closing happening tomorrow. And anybody else in the room have anything they want to share? All right. Hello, welcome.
Oh, hi.
Hi.
Hey. Hi. Have a
Um,
sit.
All right. So
This is your new agent.
it's a new agent. Yeah. No, we're all mad at her now because now we're not going to win something. It's ruining the odds.
Shut the door.
Shut the doors. Yeah.
5 more minutes later.
All right. We do have some awesome upcoming events. So let's roll through that really briefly. So if you haven't noticed, doesn't the office look beautiful?
It does.
No, like, I called the lady who was doing this and I was like, "Do you provide this service to like residences? Because like, I want my house to look like the office right now." And the reason why it's decorated like that is because we have our Christmas party later today from 6 to 8 p.m. It'll be here. There'll be food, there'll be music, there'll be Mr. and Mrs. Claus. And my goal is to get Mr. Claus to take a shot. But yeah, come out and have a good time. That's happening later today. And then after Christmas, in the new year, we have Jay. He's going to be speaking on how to grow your real estate business using virtual farming techniques. He's got some cool tools, some cool software, and he comes highly recommended from the Meeks. So he'll be speaking. And then on the 7th, I believe. And then our next, so there's no PCAR this month. The next PCAR event that's going to be taking place is going to be Thursday, January 16th. And it's going to be Matt Smith. Brent Gove will not be there. Just a heads up. Hey, Manu. So that's happening the third Thursday of January, so January 16th from 10 to noon. And then is there anything else, Jose? Where we go? Oh yeah, we keep hitting on this. Keep hitting on this. It's not too late. There are still rooms. There are still tickets. Jeff, are you going?
Are you kidding me?
Yeah.
I never miss an event.
Never.
Never.
Yep.
Never.
And especially you don't want to miss this one. It is going to be a lot of fun. We have Gary Brecka speaking, Ed Milet, Pace Morby, and Tom Ferry. This is not an EXP event. This is a Brent Gove event. Brent Gove is the one that has the relationships and that is putting this on to help our agents sell more houses and be more productive in 2025. Okay. And then I think that might be it. Yeah. Then of course, JJ.
Hey.
Hey man, what's happening in the wonderful world of lending?
Yeah. Want me to come up there?
Yeah, come on up here. So that way the people online can see it.
All right. See my
All right.
face.
Give him a round of applause.
Yeah, man.
Thunderous applause. Woo.
Awesome. All right. Well, everybody didn't show up because rates went up yesterday. Is that what happened? Oh, this sucks. We're not coming to work anymore. Yeah. It's all my fault. Yeah. So yeah, Feds met yesterday and woohoo, they lowered rates, but what did that mean for the whole industry? Well, they lowered rates by 0.25%, so that means they lowered rates by 100 basis points this year, and that was their target. That's what they wanted to do, so they did it. So now we're in that 4.25% to 4.5% range. I wish mortgage rates were there too, but that only really means that the Fed fund rate was lowered, which is like credit card rates, your auto loans, your student loans, HELOCs. If you have clients that want to do HELOCs right now, it's a good idea. Those rates are coming down. I actually got my statement in the mail this last week for my HELOC, and it showed my interest rate going down by 1/4. So that's kind of fun. But yeah, that's what happened. And then what happened is Jerome Powell got up after he lowered rates, and he said, "Hey guys, we're not going to focus so much on jobs anymore. We're going to start focusing back on inflation. We really need to get inflation back on target." And so that spooked investors. They got out of the bond market. They went back into treasuries, and all of a sudden interest rates went up.
Wow.
So that's what happened in a nutshell. And we're thinking that, but with that being said, there's a lot of opportunity in the market right now, especially for first-time home buyers. And I'm going to talk about first-time home buyers in a second. But before I do, there's opportunity for you as real estate agents, because a lot of you had last week signed up for our 75 hard challenge. So we've already had 10 people from this office sign up. I knew you're one of them. Really excited to have you join it. It's gonna be hard. This isn't easy. If anybody here has done a 75 hard, has anybody done one?
Done 30.
No, you've done 30?
Yeah.
Okay. Mary's done one. So you can tell, like, after you did it, you probably, after the 30 days, you probably were stronger in the areas that you were focused in, right?
Yeah, there's a lot more clarity, less scatteredness. Like you're just very focused.
Yeah.
Yeah.
And it's like the same thing, we're going into this new year, you probably have goals. You want to make sure that you're hitting those goals. Well, this is a good way to do it with people around you that can help hold you accountable. And so, in 75 hard challenge, as you know, there's 6 things you got to do every single day. You can pick whatever 6 things that you want, design it for your personal goals, whatever you think you'd like to do into this new year. And those 75 hard challenge, we will be getting you information. If you did text this number up here and say you want to be a part of it, we will be sending you out a text message this week, probably by today or tomorrow, with the information of what you can do and how we're going to set it up. But we're very excited about it. And at the end of it, I'm throwing a party for everybody that does the whole thing. So we've got 30 people signed up in total from my office and this office. So if all 30 people make it, it's going to be a big party. It's going to be a lot of fun. Hopefully more people sign up and we just really go hard. But that's going to be a fun time. And then put it on your calendars. A lot of you guys have been asking, are we doing a vision board party again this year? We weren't going to, but a couple of the loan officers in my office said they're going to set it up. And so we're doing it again, January 23rd. That evening, we're going to go. We're going to have a DJ there. We're going to have McCooney's. Taro's going to cater it for us. We're going to have a lot of fun. And last year, I think we had just under 100 people in our office. It was crazy. Johnny was there. I think Valerie was there.
Yeah, it was fun.
Pretty nuts, right?
It was a good time.
Renew was there. Yeah, it was a lot of fun. So that's a good thing. So with that being said, first-time home buyers, like I was saying at the beginning of this meeting, interest rates are up, but that means that there's opportunities. And did you know that 85% of all first-time home buyers can qualify for some part of down payment assistance programs, but only 20% have usually take advantage of it? This was last year. Only 20% took advantage of the 85% that could have qualified for a first-time home buyers program using some sort of down payment assistance. So why is that? Well, I personally believe it's because loan officers aren't doing their job. When you're referring out to your loan officer, a lot of times they will take the easy way out, right? They'll say, well, oh yeah, in FHA, you've got money. Well, then let's just go this way. That's an easy way out. And so I think that they're not doing their job if they're not giving them all of the information that they need. And there's a lot of different first-time homebuyer programs that are really good out there. Just at American Pacific Mortgage, we've added 54 products just this year alone, and 10 of them were specifically just for first-time homebuyers, with 2 of them being grant programs. And so if you have a client, or if you have somebody that maybe, let me ask you a question. Have you ever had a client that you've called on and they said, I'm not going to purchase anything right now, maybe because the down payment, I just don't have the down payment, my credit score is not there yet, something's not there, right? But then maybe you ended up referring them over to the loan officer, and what ended up happening? They ended up realizing that they could end up purchasing, right? And they ended up doing it. And so I feel like there's a lot more opportunity now more than ever to make that happen for the clients. They don't think they can qualify, but in reality, they really can. And so I think there's some programs out there that you probably haven't heard of that I would love to talk to you about. With that being said, let me just make sure I put all my notes here. I do have one client that we just did this with. And we just got into escrow this week, and I'll tell you about that really quick, and then I'll sit down. But we had a client that came to us from a real estate agent, and the client said, I'm not going to purchase right now, but my realtor just thought it was a good idea that I got qualified, so I know what I'm qualified for in the future. I'm thinking around maybe summer. I think that's when our interest rates are going to come down. For whatever reason, that's what they thought. We got them qualified, and we showed them the payments with the regular FHA loan, and they're like, yep, that's what I thought. I'm good to go. I don't want to purchase right now. Let me know when interest rates drop at least 1%. And I said, okay, well, what if I can get you 1% lower today? And they said, well, you can't do that unless I pay for it, right? I said, well, let me tell you about this. There's two ways to do that. I can get the seller to pay, or your realtor can get the seller to pay for a buy down, and we can get you that lower interest rate. And all of a sudden, it just like opened up that they were ready to move forward.
Wow.
It was like that quick.
Yeah.
You're like, well, if you can give me that rate today, then I'm ready to buy. And so then I called the real estate agent, and she was super excited, and they're out looking at properties. I just, on the way here today, I got a call from the listing agent asking how well they're qualified. And they might be getting into escrow.
Nice.
So that's all it takes, guys. Great opportunities in the market. And any questions, anything I can do for you guys today? Not?
Yeah, roughly what's that cost for that buy down? To tell somebody they're gonna buy a quarter down, do you need a point credit? What is there a rough rule of thumb?
So the 1.0 buy down, like I was getting for this guy, he was comfortable with a 6% interest rate, and interest rates are roughly 7% for his credit score and stuff. That was comfortable for him. With that 1 year temporary buy down, with his purchase price at around $600,000, we only needed $5,000 to get that rate for that first year to be 1% lower. So it's not even a full percent of the purchase price of the house. Now, if you're getting a 2-year temporary buy down, it is a little bit more. It can cost anywhere from about 1.5% to 1.75% of the purchase price of the house. But a 1-year buy down is not very much. It's pretty minimal.
Thank you.
Yeah.
I just want to give a shout out to you. I just showed a home to someone yesterday. One of your good looking lender approved them. So
yeah.
Name right, Sam.
Yeah, exactly.
Oh, that's awesome.
Love it.
they picked 2 houses to see, and they picked one to write an offer. We'll be working on it.
Doing Sam.
That's
Alright.
great.
Well, that's exciting to hear. Well, thank you guys. And I'll see you guys all at the
Thank
party later.
Yes.
Yeah,
thank
thank you.
That's crazy. I didn't realize it was just $5,000 to buy down the rate on a $7,000 home. I thought it was gonna be like $6,000 or more. Learned something new today. All right, and now we have not one but 2 speakers today. But first, Jenna reached out to me through a mutual friend, Frank Crandall, and he's like, Johnny, you have to talk to Jenna. She's got some great information that I think will resonate with agents and could potentially be life-changing for them. So without further ado, everybody give her a round of applause, please.
All right, so I do work with a ton of real estate agents and their affiliates, small business owners as well. For those of you who don't know our family yet, we do 2 things really well. So we're cattle ranchers. We have 300 acres, horses and cattle. And the second thing we do is insurance. So my dad works here, my brother, my uncle, my aunt, my best friend. And the reason for that is because our family has gone through cancer multiple times now. Anyone know anyone who's gone through cancer? So your whole life kind of stops when that happens, right? And something that we've kind of missed the boat on here, say as a country, is government has us all thinking vision, dental health, which is fantastic, right? But who does that pay? It pays the hospital, right? Pay the optometrist, we pay the dentist. A question I had never asked myself until it happened, just, for the room, who pays you? Question. Anybody? Nobody.
Yeah.
How have we not thought of that? Oh my goodness. So I had a guy on my team get stomach cancer. He was out for 18 months. Who pays you? And there's no reason. He doesn't smoke. He doesn't chew. He surfs. He's healthy. Doesn't make any sense. I had a guy on my team run Tough Mudders. He just had a stroke. He was out for 9 months. So if you were out for 9 months or your spouse, who in the room would be in great shape? What about 3 months? Right? This is life altering stuff. Do you know what the odds are you'll get cancer? 1 in 3. Like, do I think I'm gonna get cancer? No, I don't really. But is it possible? Yeah, 1 in 3 says it is, right? And especially just the impact that it has. So no one thinks about that piece of it. But I'll tell you, if your spouse, something happens, your child, something happens, this will be the most important conversation you've heard in a really long time. And something that's incredible about this company, I've had dinner with our founder multiple times, and he said, why do you think most people are underinsured? And I said, well, I'll tell you, for one, it's too expensive. And secondly, if you don't use it, you just throw all your money out the window, right? And most of us, that's a big pill to swallow, especially in this economy, right? And he said, well, what if it wasn't too expensive? And what if I gave it back to you if you didn't use it? I said, well, yeah, then everyone would have it. And he said, good, because that's our product. And that's exactly how I want people to respond. You should give them back their initial investment. If they're a loyal client, they stay with you, give them back what they put in. So every dollar that comes into this, if you don't use it, you're one of the lucky ones that doesn't get cancer. You don't have a heart attack. Nothing bad happens to you. You get all your money back. But I will tell you, most people at some point in this journey with us will use it for something. You'll use it for an accident. You'll use it for skin cancer. You'll use it for something with your heart. We've already used it personally in my own household twice. And it's like, oh my gosh, maybe more. 3. So it's just, things happen, things come up. So do you want me to click here? Or do you want me to just tell me to click here? So I have so many testimonials. I have text messages on my phone that say, you saved me from losing my house. I mean, tons that I can tell you. This is one personally from Robert Tamsin. Who in here has kids? Anybody kids? Okay, me too. 3, TK kindergarten and first. Pray for me. This says, unfortunately, my son Joey was diagnosed with brain cancer at 15. Perfectly healthy child. This is another thing, right? We have healthy children right now. You just don't know when all of a sudden, out of nowhere, that's going to change. He battled cancer for 2 years, and even though we had great coverage, there was still out-of-pocket and unforeseen costs that had to be met. We traveled numerously to Houston, which my family was treated in MD Anderson. The travel, guys, is absolutely insane. All of my transportation and hotel expenses were reimbursed back to me. I received over $70,000. And thank God I had family heritage. Every man, woman, and child should have a cancer policy. Joey was a brave young man who never showed fear during his battle and was willing to do anything and fought a good fight. He wanted to live and frequently said, Dad, trust God. That's exactly what we did. And family heritage helped to afford to give Joey the very best care. I mean, it's life altering stuff. I know it's not fun. I know it's hard to think about, but the amazing thing about this is it's inexpensive. Something comes up, I'm in your corner. And if nothing happens, you get your money back, right? No hard, no foul. It's amazing. Like there's no reason not to happen. Go to the next. 1 in 3, 3 and 4 families. I mean, just in the room, over the course of our lifetime, good to know. After you get cashed out also, rate stays the same. Your rate never increases. I have people that constantly file claims, especially my arborists. They have me on speed dial. You can file as many claims as you want. Or people that have kids in sports. My nephews had 3 concussions playing soccer. Stuff happens. But cancer, 1 in 3. Heart, if heart, next. Oh, cancer, yes. So it used to be primarily with women. Breast ovarian runs in the family, right? Prostate runs in the men's side of the family. If that runs in your family, absolutely, right? You have to make sure you have this, but a ton of the cases I'm seeing, it doesn't even run in their family. It doesn't make sense. I just had one of the guys at our inspection company get throat cancer. He's never smoked. He's never chewed. There's no reason for him to get throat cancer. But we're getting this because why? The food, the environment, the air, ladies, the makeup, the lotion, we're slathering just cancer on ourselves every day. Good times. Like your biggest organ. So the good news is 6 out of 10 people are surviving, but the bad news is how expensive it is. So go to the next. Okay. So heart, if it runs in your family, right? Which it does in mine, heart, the bloodline runs strong. Make sure you have something. If you're my meat eaters, my tobacco users, high blood pressure, diabetics, if there's any stress in this room, no stress. So stress, it impacts your heart more than you know, but that's a big one. And then last but not least, accident. So this one, I think my agents use this all the time. We have one of my Lion agents just passed away at 26. If you guys didn't hear that was a big one that kind of rocked the community. He had just enrolled in this policy 2 months prior, and I delivered a check to his family for over $60,000. And his parents came in and told everyone in the room, like, what we did for them and how impactful that was.
Right.
But again, he's 26. Like, you just don't know what's gonna happen. You guys know Mike Ewing, over at Next, he was locked himself out of his house, was jumping his own fence, broke his upper forearm. He had just signed up. So it can be any little thing. But if you leave today and get in an accident, the big things matter too, right? Okay, so the top part of the iceberg here is what your healthcare covers. So if you guys are doing Kaiser pays Kaiser, Sutter pays Sutter, everything below that line though is who on earth is paying you, right? So next slide here, you can use it for anything you want. We just dump the money in the account. We do not monitor how it's spent. Most people will use it for loss of income, right? Unforeseen costs, co-payments, deductions, all of that good stuff. Out-of-pocket coverages. One of the guys that I've been in banking for 13 years prior, literally his wife had something happen. His out-of-pocket was $47,000. His max deductible was $3,000. Like, riddle me that. But it's because now if you really dive into your healthcare, there's a lot of very loose language, a lot of may or could or if. So you really don't have a clear answer as to what it's going to pay, and a percentage is also paid. So a ton of my patients, it'll say, oh, well, we'll pay 80%. Well, that's awesome. Do you know what the 80% was of? Like, what 80% of 10 grand, if you're paying monthly, that's 2,000. That's a big amount. That's an extra house payment. So all of that stuff matters, and this stuff adds up pretty quickly if something happens. So most people, if something happens, right, will burn through liquid funds, downgrade lifestyle, lean on family, kind of in that order, or GoFundMe's have become wildly popular. But I would just tell people, like, take 2 seconds and ask yourself, if I'm out of work for any duration of time or my spouse, would that impact your household? Like with this room, would that impact your household? Yeah, right? That's why it's so important. This is nice. You should come with me after. So the big concept is healthcare pays the hospital, we pay the patient. And to me, like, the patient really needs to be paid, right? Your household needs to continue to run. So simplicity wise, I literally done 44 applications in the last 2 days. Like, applications is just contact information, where you want me to put the funds, who you want me to give to fast. It's very quick, easy, no physical. So really quick and painless. Affordability, you can throw as much as you want at this. I mean, the lowest policy is $3.10, highest policy is hundreds. So the more you put in, the more you get back, right? An easy decision, something happens, we pay you, nothing happens, we pay you. There's no reason not to have it, so that makes it nice. And then the company's been around since 1900. We hosted the World Series, if you guys are baseball people. We also hosted the largest rodeo in Texas, so that's fun. A+ across the board. So Better Business Bureau, you guys are probably familiar with AM Best since it's their financial strength rating. So, fantastic. And this is how the money back works, best part. So nothing happens, 25 years, it automatically deposits back into the account. If something does happen, right, like things have happened with our family, you just subtract it out just like a savings, or if it's something big, right, we give them a few thousand, they give us a few $100,000. That's a big difference, right? So that's kind of how that works. And then on the accident policy, every year after that you don't get in an accident, you get paid. So you start making money off the policy. Does that make sense? So anyways, that's probably the biggest thing with it, is there's no risk in this. My husband's mom passed away a few years ago of an aneurysm. She just didn't go to work one day, and we found her, and she had literally passed away of an aortic aneurysm. So they immediately cashed out these policies. So if you don't make it to 25 years for some reason and you sign up and you pass, we immediately give it to your family. And for us, that was really important because we didn't see money from any other company for 9 months while we were keeping up the house payment, because that's our rental now, and cremation. I mean, there's a lot that goes into that. So having this in your pocket right away is also really nice. Any questions? I know that was a lot of information. Sorry. Yes.
Says issue is 64, so if someone's 63, they can get the insurance.
Yes. So only in California, right? We're special. So if you're under 65 or loophole married to someone under 65 in the state of California, you can enroll. Anywhere else, Nevada or Texas or something, but they go up to 80. So if someone is visiting or they're living in any of those other states, they can get these at a later date. But here in the state, under 65. Any other questions? Yes, sir.
What's the recommend, like, how do you determine how much coverage is needed?
Yes.
It's a good idea.
Yes. I said with you and I tell you. So Amber and I, this is Amber. She's one of your local agents as well. So after the meeting, we're gonna pass these out real quick. Actually, Amber, I could probably have you pass them while I'm talking. Anyone need pens, or you guys all have pens? Oh, you prepared. Who did that? You did that?
Yeah.
Thank you. Okay, anyone need larger print too? One of my assistants printed some larger print if you don't feel like busting out your readers. Big print. So let her know which one you want, if you want a big one. But we'll pass these out real quick. This is also for the raffle, so again, good odds. But we'll follow up with you. A lot of times after my agent meetings, you guys have to hop out and run around and see houses or do showings. So if that's the case, just jot you don't have to fill out the whole thing, just jot down your name and number. But if you have time today, really quick before I head to my next event, Amber and I can sit down and go over it with you and show you exactly what the rates are, what makes sense for your household. And again, these also, you're not married to them. You can change them whenever you want, and it goes into effect the very next month, which is really nice. So once you've been a policy holder, after 6 months, you can increase and you can decrease at any time, which makes it awesome. There's no enrollment periods. You can make changes whenever you want. Yes, sir.
So when you get that money back out and it's gained, you pay taxes on that extra money?
No, isn't it glorious? Because it comes out of your bank account versus payroll. So no taxes, which is so nice. Because when I tell people what they're gonna get, I mean it, and they're not gonna tax that. And that's really important, by the way, at that time, which is huge.
I have a question. So you don't have to do you have to prove any kind of hardship in
No,
order to do it? So if I have, instead of
just-
tapping in my investments or anything I have, I
yes,
can just utilize.
use us. Yeah,
Okay.
absolutely. And honestly, I've done a lot of research now on cancer policies just because my family's riddled with it.
That's a
This
huge
is the
part of it.
nicest
So,
cancer policy I've ever seen.
What was the type, I must
yes.
have missed it. What
Sure.
was the type of insurance this is?
That's considered supplemental. It comes straight to you. So basically, healthcare is gonna pay the hospital, I'm gonna pay the patient, which would be you. Does that make sense? You know, isn't that crazy? We've never heard of it. How have we never heard of who pays the patient? It's crazy. I think it's so insane. You have to be paid as the patient, especially if you're sick or your spouse is
triggers
sick or your
payment?
child's sick. Any of those things, anything catastrophic. So if you have any type of accident, I mean, I honestly had a gal drinking Starbucks the other day, a spider crawled out, bit her in the roof of the mouth. Yeah, good times. That counts as an accident. I had someone walking and tripped off a curb wrong. That counts as an accident. Amber has filed claims. She tore her meniscus doing a butterfly sit. That counts as an accident. Yeah, my daughter shoved something so far up her nose, we had to go in. That counts as an accident. My husband flipped a golf cart, that counts as an accident. Yeah, I mean, I have some wild stuff, but as cancer.
I could
I
probably
didn't
do.
hear you answer Johnny's question.
Sure. Oh, how much is it?
Yeah.
How
How much?
I
You
never
said
have
it was
it.
a great question, I think we didn't answer.
Oh, I answered it as far as I usually do it individually, because it's based on your age and your household. So whether or not you're married, if you have kids, I mean, I can give you an example really fast. For example, I can give you your exact example if you want to. So let's see here. I'll give you some rate quotes just live. I mean, you guys have rate quotes for fun?
Yeah.
Yeah,
let's do
right?
it.
So the nice thing is it's dependent on your age. If you're married, it's whoever's younger. We go off the younger age to save you money. So your spouse may save you money for once. Yay. Okay. Wow. So as an example, what age do you guys want me to do? I'll plug something in for you.
It's fine. 54.
54, okay. And that's the younger. Are you married, single?
Married.
Married, okay. And 54, okay. So say, for example, you wanted to be covered across the board, right? Now, if anything happened, cancer, heart, whatever, you would be covered. Would you be covering just yourself or you and your wife?
Just myself.
Just yourself, okay. So just as an example, we'll do some live examples here. Say you wanted everything to be able to be covered across the board, you can do it for as little as $79 a month. And that would cover you completely across the board. Or you can do it all the way up to $419 a month.
What does the 79 give?
Exactly. So that's kind of what I go through, and normally I do it one-on-one, but I can do it with you guys right now if you want. Do we have time for that?
Let's just do this scenario.
Just do a quick answer. Is it 100,000? Is it 200,000?
So the easy way to put it is each level, say you're hospitalized and you're going through it, 3,000 a month in income, 6,000, 12,000, 24,000. But it's not just that simple because there's a lot more to it than that. Like if you get cancer, for example, and you have this policy right here, the 131 a month, upon diagnosis, you'd also get $6,000 just upon diagnosis for your pathology report. If you needed surgery, you'd get paid for that. If you were going through
Depending on
chemotherapy,
what you need
Yes.
and how much you buy,
yes,
that's your payout.
correct. So one of my uncles
If
just
you
went
turn your
through,
golf cart over,
right.
they replace your beer.
Actually.
Please.
Haha. So for walking into urgent care on the Elite, you get $400. If they scan you, another $400. If you had a concussion, which you did, another $400. So it all adds up. If you broke something, like say he landed on his ankle, right? An ankle's worth 2,800. So it all adds up, right?
All right.
Wow,
Does that make
that's really
sense? So it all kind of stacks on top of each other. One of my uncles just went through radiation. So for Elite, that's 480 every time you're going through it. He went through it twice a week for months. So that's all
Wow.
just income coming in, right?
Thank you.
Yeah, does that answer it? It's a little more convoluted, but if we had the time, it takes me about 10 minutes per person to like go through the whole thing. That way you can see exactly how it works. But it's incredible. The payouts are incredible. The fact that it has no limit and length of time to how much it pays is incredible. But I'll do quick one-on-ones and I can tell you your exact quotes.
And
How
you
much
just
it'll
make your
be.
money on investing the money
You got
that people paying premiums until you get it back.
100%. And honestly, that's how every insurance company makes money and every bank. And anyone could give you your money back. They could do that on our auto, on our home. I mean, the whole economy would be in a better space if they did, right? Yeah. Exactly. Yes. Okay. So real quick, pass these babies and Amber just gave you back and we'll do the raffle. Gracias, gracias.
Yeah, that was
Really
awesome.
good, really good.
Yes.
Isn't it amazing? I'm like, make sure you have something. If anything happens to you, I promise I will be your favorite person.
Sounds like.
And if nothing happens to you and I give you your money back, I'm still your favorite person. All right, did everybody get in? Any others that want to be in the raffle?
Sure.
Yes, did we get one down at the end, Dams, are you in the raffle?
I am not in the raffle, but I feel bad because I missed the whole thing.
That's all right, we'll tell you about it later. Get in the,
Hold on.
do you still have some for her?
No, I put them right next to you. I did.
Okay.
Hang out until the end of the meeting.
Yeah, absolutely.
Okay, so we'll do the raffle. You
Yeah.
guys fill it out. We want to make sure that we have enough time for our next speaker as well. So just go ahead and get them to Jenna. The Chris DeVary, let's go ahead and pass them a little.
Did you want me to do the raffle
That's
again?
the space we're going. You know what I mean?
All right. Well, guys, that was the first speaker. We have a second
That was
speaker. And the second speaker comes to us recommended by none other than Brent Gove. So Brent called me and was like, Johnny, you gotta have this guy speak as soon as possible. And so, because he's got some great, like JJ's our in-house lender. He's like, this is not gonna impact JJ at all. Send all your business to JJ, but for the stuff that maybe is outside JJ's scope, this might be your plan B. So everybody, please give a big round of applause to Ryan.
Hey, thank you so much. First, I want to just introduce my team so everybody can see. We've got Nicole, Eric Bennett is my number 2. Ethan Cope is our lead consultant. And then we have Michelle. So Nicole, Michelle, and Ethan are our consultants. And so one of the things that we have come up with is, by the way, great presentation from, I believe it was Jen with Global Life. Jen, we're in Texas currently, and we would love to learn more about that. It was a heck of a presentation and product. Number 2, though, is, the lending market, the real estate market has changed significantly over the last few years. Will we all agree? We went from multiple offers consistently to lack of inventory in several markets to then inventory sitting on the market for a very long period of time. And I was very blessed to, like JJ, build up a large mortgage team. And we're excited actually to roll this out with JJ, and JJ will be our lending partner. And you guys are going to be the first in California that will have this opportunity because we know Brent. And so Brent heard about the product at EXPCon and was like, holy smokes, I've got to get you in and I want to hear about this. So we got with JJ. JJ is an integral part of everything that's going to be happening with our program here. And we're really excited to be partnering with him and his team for this. So what did we build? Well, in most of the markets around the country, make sure I can change slides here. In most of the markets around the country, inventory is expanding across the board. Houses are sitting on the market longer, and buyers are really just losing a lot of motivation because of what? Interest rates, right? And JJ talked about it a little bit. How come the Fed cuts rates and mortgage interest rates go up? Mortgage interest rates did go up yesterday. And matter of fact, some of the sentiments even there was some major CEOs on CNBC yesterday saying, gosh, I thought we were going to be in the 5s in 2025. And now we really believe that we're going to be in the sixes and the mid sixes, maybe. Who knows what interest rates are going to do? But the reality is, what is holding our buyers up from moving forward? Anybody? Come on now.
Payments
Monthly.
too high.
Yeah, interest rates, monthly payments too high. So what if we had a tool that allowed you and your sellers and your buyers to get significant lower monthly interest rates? JJ talked about it earlier. He had a client that said, hey, you can get me a 6% rate. I'm in. Let's go. Well, what about 5% rates? What about rates in the 4s? What about rates in the 3s with no additional closing costs or points? That actually can happen. We're the first in the country to build a turnkey seller bridge loan so that sellers can actually offer lower interest rates and they don't even have to have their homes paid off. So across the country, this is an incredible product. Here's some of the things that our program helps solve. Are your listings taking too long to sell? Across the country, days on market is going up significantly, particularly as interest rates didn't come down. Let's see here. Are you struggling to convince your buyers to move forward with interest rates this high? JJ and I, both of us in all of our markets, buyers are really seeking interest rates. They've lost what? They've lost their purchasing power. They've lost that 2.5 years ago. They were looking at a $700,000 house. And now with conventional financing, they're maxed out at $550,000. That's deflating to a buyer. A lot of people are going, I'll just rent again. Well, what if we could help them recapture their buying power and actually allow you to close more transactions and help more clients? How many of your clients said they want to sell? Maybe they moved out to the suburbs because they didn't have to work from the office anymore. They bought a bigger home, but now they said they cannot afford to sell because they can't afford a current interest rate in today's market, plus or minus 7%. What if you had a marketing program and that marketing program made your listing stand out and motivated buyers to make an offer on your listing? What if that same marketing program allowed your sellers to get more than full price? It's not a gimmick. And by the way, if I ask anybody in this room real quick, if you currently have buyers sitting on the fence, do you not? Yep. And if you were able to say, hey, there's programs out there now that aren't down payment assistance. If you've got some 20% down and you're fully pre-approved through JJ, that we might be able to get your rates in the 5s. Would you like to go house shopping today? Do you think that would be helpful? Well, welcome to more. And it's a seller financing loan program that's designed for highly qualified buyers. What we are showing is sellers how to provide a short-term bridge loan at a lower than market interest rate for buyers that can put the amount down that the sellers need. And the sellers are going to be able to take advantage of their low, far below market interest rate. You see, 66% of all homeowners currently have an interest rate below 3.5%. So what happens if you could go to your seller and show them how to make more money on that below market interest rate? How many of your sellers have said, you know what, I'd really, really like to figure out how to make money on my below market interest rate? Well, what is the More Loan Program? The More Loan Program, first off, is marketing. The marketing program to attract more qualified buyers with below market interest rates. Because what do buyers want? They want low interest rates. They want low fees. They want a streamlined pre-approval process, and they want to be able to close easily and on time. What do our sellers want? They want to sell faster and for the highest price and be able to move on to their next home. And ideally, they would like to get a lower interest rate as well as close early or with little closing costs and easily as well. So we want to be able to allow your listings to attract buyers that are currently priced out of the market. I just put together one example. We've been doing this here in Austin for the last year and been engaged more than 300 times. We're the first company in the country that puts together from end to end seller financing and for bridge loans. And our we're not only doing, all you're responsible for doing, by the way, is just an introduction to us. You don't need to become a seller financing specialist through this course, although we do offer that as a designation if you want to take that route and become a professional in seller financing. But all you need to do is know enough to get us introduced. But I'll ask each one of you, if you had a listing right now that you could advertise 4.99% with no points, do you think that your listing would stand out? Do you think your buyers would be more interested in going after that home than other homes in that same neighborhood? Most people say absolutely. So here's one of our current properties. It's a $650,000 sales price. This particular seller needed 20% down. So it's a $520,000 loan amount in order to get the 4.99%. This monthly payment savings for the buyer is $676 a month. This is absolutely huge compared to a traditional financing for this buyer. Let me walk you through what the benefits between the buyer and the seller are. Here's what we have. So at the top, you'll see a $650,000 sales price with 20% down. This buyer in particular ended up having a little bit lower credit score, not perfect credit score. So we worked with the seller and suggested the seller charge a little bit higher interest rate than 4.99 to 5.25. And this is, you see, this is for a 36-month balloon note. So this is a 3-year balloon note. Now, all of the buyers must get pre-approved through JJ. So what happens is the seller gets signed up with our program. We have you on every single Google Meet call. It's recorded just like this one. We'll explain the whole program to the sellers. They go ahead and complete a short questionnaire. They upload their mortgage statement, and this is what we'll give them. And matter of fact, if you're going on a listing appointment and want to include this in your listing presentation, reach out to us ahead of time. We need about a full day to put these together, and we will go ahead and prepare one of these so that you can also stand out amongst any other competition and other agents you're competing against. How awesome would that be? You're sitting at the kitchen table and could say, you know what? We have a specific and specialized marketing program that can help you market a short-term bridge loan to a highly qualified buyer, because you don't know exactly. Our job is to market this property. That's what you're hiring me to do. And I'm going to show you that we are the only ones right now in California that have this program, and it's expanding throughout the nation. We're taking this program absolutely national. We're doing that through EXP. And several other agencies, but you guys would be the first in California to have it. This seller right here is making $823 a month after they've sold their home. That's right. They get 20% down and they're making $823 a month. The buyer is saving over here on the far right, $676 a month. And if the buyer were trying to buy down this current interest rate with a traditional lender, they would pay about $27,000 in points and closing costs. So what we're showing here is that in this closing right here, where it says in the bottom 122. So if they did a traditional transaction with their traditional lender and they sold it traditionally, they'd walk away with $122,000 after agent fees. With our program, they're going to leave a little bit of money in the deal. So in this case, after realtor fees and our fee, the seller walks away with $85,000 instead of the 122. So they left about $34,000 in the transaction. They left $34,000 of equity in the home. During the 3-year period of time when they did this bridge loan, they made $29,625. Where did that number come from? That's $823 over 3 years equals 29 grand. Then when the buyer, JJ, is going to try to refinance this buyer as soon as humanly possible, as soon as rates drop, JJ and his team are going to refinance these buyers. When they refinance these buyers, our seller, your seller, gets paid a third time. And when they do that, they're going to walk away with right around $74,000 when the buyer is refinanced by JJ and his team. What that equals is your seller made far more than full price. They actually made an additional 35% or $66,000 $66,233, $66,000 more if they accepted the seller financing bridge loan offer. Now, we don't have to, by no sellers, if they're offering this, they're not required to accept a seller financing offer. This is a marketing program. I was working with a large team in Arizona a couple of weeks ago, and it was last week, and I followed up with him this week, and he said, Ryan, I thought we were going to be able to land 4 or 5 of these right out of the gate. And I'm trying to convince our sellers how to do seller financing, that they should, to be open to the seller financing. And I said, hold on, this is a marketing program. Our job and your job is to bring offers, is it not? He said, yeah, absolutely. I said, so we're not trying to convince a seller that they're going to absolutely do seller financing. What we are showing them is, in the event this is the only offer they get, or this is the offer, if they receive an offer, then we've actually used this program and created multiple offers with this program in a down market, an extremely down market in Austin. That this is an option, just as your job is, and our job is, your job's to market the property. We are not agents, by the way. We just co-market this program with you. I'll show you what this looks like in MLS in a moment. But you just bring offers to the property. And then if it makes the most sense for the seller, we'll advise the seller on what that looks like. And then we advise the buyer and the buyer's agent on how to bring the deal together based on terms. Before I jump on this though, do you see this additional equity earnings, $37,000 right here, $37,577. This seller sold their home. They have a 2.75% interest rate. Anybody here? I know I'm going over a lot of numbers, and agents usually don't like numbers, but what's the current interest rate on this property that we're offering? 5.25. Do you see that up at the top? Okay, the buyer is paying 5.25. But the seller has a 2.75% loan. That means over 3 years, the seller is still building equity after they sold the home. They picked up an extra $37,000 in value on this. Does that make sense? Are we seeing how this comes together?
Yep.
All right. So who's a good candidate? And then I'm going to show you a Zillow picture of what it looks like in Zillow. Who's a good candidate? First off, sellers that have already bought their next home, and you currently have their home listed, and you're trying to drive sales, and you're just maybe not finding that right price, and they currently have their departure residence still to sell. Non-warrantable condos. Non-warrantable condos, current interest rates are usually in the high 8s to 9s. They're expensive, they're short term. Your seller can monetize or make money off their far below market interest rate and make it just a great living, great monthly income off of this. Deals that blow up at closing due to minor lending issues. JJ and I were talking yesterday, and he said, I can see this if there's a minor issue and we just need to clear something up, we can go ahead maybe and close them on seller financing today and then get them refinanced in a very short term. You saw we recommended on the previous transaction, recommended 3 years. We've done these as short as 6 months and as long as 7 years. It's completely determined by your seller, which is why we have your seller complete a very short questionnaire and upload their mortgage statement. And then we have you and your seller on a Google Meet call. Sellers that have interest rates below 4%, little flag should go off when you're talking to your sellers that, hey, this could be a good program for them to get them introduced to us. Sellers that have more than 20% equity, another good flag to say, oh, wow, this could be a good candidate for more. Sellers that have their homes paid off. More than 50% of the United States owns their homes for cash, but they're also really want to get a higher sales price. Seller financing generally is full price. There's no additional seller contributions. Now, that's between you and the buyer's agent. We do not touch sales price. Our job is to help you bring the transaction together based on great interest rate and what's called lending terms. If you have a buyer that's looking for waiting for lower interest rates, you should be able to leave this room, hopefully with 3 names written down in your phone that this would be a good program for. Did any names that you've been working with over the last 2 years come to mind as I went through this list? I hope so. All right, here's what this looks like in Zillow. So we help you co-market this. you'll see always our flyer goes up and set in picture number 2. You can actually change the look and feel of this flyer. We give you a couple of different templates. But if this doesn't match your color scheme, then we can work with your marketing team to come up with that. This is worked with their Compass. This was a Compass agent, so they wanted black and white. But you'll see, we put this down here at the beginning of the agent remarks. You can buy this $650,000 home for the same payment as a $551,000 home. Upgrading to this home with seller financing with a much no lower than market rates, right? So what's this doing? If you have a buyer that is currently maxed out at $550,000, and they remember they want to buy, you remember when the rates were lower, they were looking at higher price points. They're frustrated with the inventory at 550. What do you have buyers that want to buy more home for less money? We do. I know a lot of agents that do. This program really works for that. No formal underwriting. They do have to, all of them have to get pre-approved with JJ and his team. These are much lower closing costs. There's no discount points and close as fast as 10 days. Once JJ and his team actually pre-approve them, JJ and our consultants will be on the phone with you and your seller, assuring the seller that the buyer is highly qualified. If they're not, JJ will make a recommendation, as will we, when we go through the qualifications of the buyer with your seller, that, you know what, maybe a 3-2-1 or a 2-1 buy down or a 1-1 buy down is a good counter instead of the seller financing, because this buyer is just not as strong. Almost 50% of every single one of the marketing programs that we've closed on this with the bridge loan where we've offered it, 50% we help convert to a traditional transaction. I want that to sink in for a moment. Again, these are buyer's agents and buyers that called on the seller financing part. JJ and his team would have pre-approved them. And here in Austin, we pre-approved them. And then we're making a recommendation to the seller, you know what? This actually isn't a good fit. Why? Well, the credit score is low. The debt to income's not in line. The buyer doesn't have enough reserves in case life happens. Jennifer was talking about life happen with Global. Life happens. And so we have to make sure that our sellers are not at risk when we do this. I had 11 loan officers, 5 realtors, 3 law firms build this program, and it took me almost a year. And we took this program all the way to Washington, D.C. and hired the law firm that RESPA and Dodd-Frank hires. And they gave us the green light and literally said, go with God. This unlocks and solves so many things for so many buyers and sellers in the market. Here's some success stories real quick. Do you have to leave money in the transaction as a seller? The answer is no. Here's one right here they had an $850,000 home. They owed $500,000. The seller said, I need to get all of my money if I'm going to do a seller financing transaction. This seller was able to get $350,000 down. They provided a seller financing bridge loan for 3 years. And so they got 100% of all their money, all their equity, and they still make $581 a month after closing. That's huge. You don't even own the home. You got all your money out, and they had a 2.75% mortgage. They offered the buyer a 5% mortgage if the buyer is able to give them $350,000 down. By the way, this home was on the market for 84 days prior to adding the more seller financing program. It went under contract in 36 days after adding this program. And there was 46 homes on the market within a 3-mile radius of this property. They sold for full price, $850,000. The buyers, by the way, were saving almost $1,700 a month compared to traditional financing for this second home property. Here's one right here. This one's on the market for 73 days before they went live with more. We added our marketing. We had our first owner financing offer within 24 hours. That property actually is attracted more. And not only they had a multiple offer, they got an offer of seller financing within 24 hours. And then they also received a cash offer. So we were able to go into a multiple offer situation, seller accepted cash offer, of course. There's no cost to the sellers if they go ahead and market the program and don't close seller financing. Here's one right here. This deal blew up at closing due to a minor lending issue. So what happened? This was a condo and the master policy didn't qualify for the lending guidelines. It blew up the day of closing. We put it back together and closed it in 11 days. So question is, how do I get sellers introduced to more? This again, you do not need to know how this program works, except for on a high level. And you ask them one question: is there any circumstance in which you would consider offering a seller financing or a bridge loan for a highly qualified buyer for a relatively short period of time? Again, these could be as short as 6 months. If it allowed us to sell your home faster and for more money. That's the question. If the answer is yes, great. Let me get you introduced. And a specialist will confirm if this program would make sense. You can bolt it on at any point in time. So we have a reverse prospecting that we'll work with. We'll roll this out with JJ, where JJ and his team, when you get your listing signed up with more, every Monday, do you guys know where the tab is, or reverse prospecting in MLS down at the bottom? If you have people that have heart or light bulb that property, JJ and his team or the More team will reach out and say, look, we currently work with this listing agent, and we wanted to make sure that your buyers saw that this program is offering aggressive financing for a highly qualified buyer. Would you check and see if your buyer is qualified and highly qualified, and see if they would be interested in an interest rate that's 4.99% with no additional points, potentially for as long as 3 years? So a lot of us have buyers sitting on the fence, so waiting for this. So that the More team will call, or JJ's team will call as an extension from your office to explain the unique offer. The More team will report back to you so you can update your seller. A lot of times we have sellers that are going, what have you done? What have you done for me lately? Right? What's your MLS marketing doing? So that's what that looks like. We also have a buyer program. The buyer program is, once you have a buyer that gets pre-approved with JJ and his team will reach out to the buyers, properties, the listing agents that are interested, where your buyer has a home that they're interested in, and let them know that they have a highly qualified buyer, and see if they might be interested in creative financing and or doing seller contributions to buy down the interest rate. So get them enrolled. So that's what we've got for you, ladies and gentlemen. We've got a tremendous amount of social media that we've built for you. We've got postcard campaigns that you can do for people in your database. We've got flyers, we got email templates. And so we have proven success. We'll help you bring these deals together, and we're here to help you get more out of your home. And so come and follow up with us to learn more. You can go to our website, or you can take a picture of the QR code. And I hope after listening to this that you've left with at least 3 people that have come to mind. You'd be the first audience that I've spoken to in over a year, because we've rolled this program out at the very in 2023, in December of 2023. So we're right at a year of having this program and rolling it out to California as we continue to expand across the country. So any questions?
What about if the buyer defaults in that bridge loan time? Is there any?
Yeah, great question. Great question. So just like a bank, we are teaching your sellers to become like the bank. So one of the neat things about our program in particular, you heard me say I worked with 3 law firms to build this program. We have a law firm involved in every single transaction that's a real estate attorney, and they have done more than 25,000 seller financing transactions between our national law firm and our Texas law firm. And so what happens when the buyer defaults? We have a mortgage servicing company, by the way, that handles all the payments. So if the buyer does default, then the seller gets the house back. We have these buyers sign what's called a deed in lieu of foreclosure, which means they don't get to delay the foreclosure process that can happen a lot of times in California. As I heard, the I think her name was it Jennifer that was talking earlier? She said only in the state of California. So the state of California can have some belabored foreclosure process from time to time. And so they sign a deed in lieu of foreclosure saying that if they're more than 60 days late, that the foreclosure is accelerated and a constable is sitting at their front door. So that's how the process works. We have a legal law firm that drafts all these documents, and their job is to ensure that it's legal, that this transaction is legal, enforceable, and compliant. What we've found is we are the very first company in the nation to create a formalized seller financing process. And our process is designed, again, for highly qualified sellers to highly qualified buyers. If they're not highly qualified buyers, we recommend a traditional mortgage transaction. Any other questions? See here in the chat, it looks like. there's a couple.
Question for you, Ryan, like, what are the next steps? Like, how do we want to use this in our business? What would we do next?
Yeah, absolutely. What we'll do is we will go ahead and send an email out. What I'll need from you guys is just to please email us with your roster. We'll email this out. The next steps, each one of my team will be reaching out to you. So you'll hear from member of each team, and that will be your specific consultant at every time. And then each consultant has a backup. So if, for example, if Nicole is on a call, Michelle will cover Nicole, or Ethan will cover Nicole, and Eric would cover Michelle, or vice versa. So there's always double redundancy. And we will help you get your sellers engaged and to walk you through the next steps. All you've got to do is we'll tell you exactly what it is, how to have that conversation with your seller. We'll send an email out to that one question you saw earlier in the slide, and then we'll give you the introduction email, which will get the process started. Your seller literally, it takes 2 minutes to complete the questionnaire. It's about what are they doing, what are their goals, your information, JJ's information, and then they need to upload their current mortgage statement if they don't have their home paid off. This will put closings on the shelf for sure, and money in your pocket with really happy buyers and sellers. We've closed dozens of these transactions. And I mean, I could go on and on and on about how much money we have made the sellers, how much money we've saved the buyers. By the way, this is also a great tool to up your sales price. I've been in business here for 22 years. Eric's been in business for 24 years. Ethan's been with us for years and years. Same with Nicole and Michelle. We're all industry veterans. We have, and for me particularly, I've cracked in and raised our average loan amount and sales price from $650 to $950. Because now you can go on after sellers and offer something truly unique that none of your competition is offering. Nobody has this program in California yet. You're the very first ones. So we look forward to helping you be a success. So send us the roster. We'll send out the next steps, and you will hear with a phone call and a text message from each one of our consultants to engage and see if you're interested, to learn more, or if you have a seller or buyer that's sitting on the fence. And then we'll get them introduced to JJ and we'll go through the process.
Perfect. Perfect. All right, guys. Any other questions for Ryan? Wasn't this good?
Yes.
This is a phenomenal meeting.
Great. Yes.
Screw those people in Folsom, wherever the heck they are. That's terrific meetings. All right. Thank you so much, Ryan.
Absolutely. You guys have a wonderful day.
Oh, that's right.
Yeah, you too. You too. All right, guys. So thank you for hanging around. Jenna has a wrap for the giveaway. So the odds are good. The odds are like twice, maybe 3 times as good as they typically would be.
All right. You wanna draw, Zach? All the peeps. Favorite. First winner is, he's all myself.
Krista.
Chris? Oh, must be present to learn. No, show you.
Does she want wine or?
She want wine or Starbucks?
Yeah.
Oh, Starbucks. She wants Starbucks. You want?
Do you want wine or Starbucks?
You know what? I'll take the wine.
Yeah. Starbucks time. Okay, next.
Drink.
Next.
Real estate would do that.
Valerie. Hey. What is Valerie?
She's like, give me the one.
All right, last but not least.
So generous.
Joseph.
Oh, he's long gone.
Oh, he left. Must be present to win.
He's like, yeah, he's gone.
We don't have to. We don't have to.
Got line, so one more.
Aw.
Manu.
Nice. Congrats, baby.
I was like,
Well, we look forward to meeting with you guys. If anyone wants to meet with us today before we leave, just grab Amber Eye and we can help you.
And we're here still if anybody has any questions that they want to talk about or ask.
Sorry, it's moving. No, I think we're good, Ryan. I think we're good.
Okay.
We'll get you the roster. We'll have everybody reach out. Guys, have a fantastic Christmas. And there's no meeting next week, so have a happy New Year. See you guys next year.